What's happening, everybody? It's your boy, Sean McLaughlin, Options Sean on Twitter. Today is November 7th, 2024, the day after the election results. The election was 2 days ago. We woke up to the winner officially on yesterday morning. We had all that big rally yesterday, and now today we've got an FOMC decision or lack thereof to grapple with later on in a couple hours. Something to be mindful of. But hey, here we are. We made it. The market seems to be offering us a little bit of clarity. We'll see. We'll see. But hey, before we get into any charts here, let me just drop the disclaimer that everything I'm discussing here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you are learning something from watching me do my process. So here is the S&P 500 right now. You could see if we zoom in, powerful rally coming in post-election, breaking out above all-time highs, making new all-time highs as we speak. So the market seems to like what has happened with not just the presidential election, but what's going on in Congress and the House of Representatives. Apparently, the market thinks that the political situation is bullish. Great. I don't have a horse in this race other than my money. And when markets are going up, that's generally a good thing for me. It's generally a good thing for you. So nothing to be upset about, right? So here's the SP breaking out, QQQ, similar story. That's the NASDAQ. I think what everyone's been talking about is the VIX, right? I mean, look at the way the VIX just collapsed yesterday. We got decisively back below 20 with a 15 handle right now. We might have a 14 handle by the end of the day today, post FOMC. So that's not nothing, right? And I talked about it on the morning show a little bit with the guys that now that the VIX is pulling back and we got the election out of the way, we're starting to get clarity in a lot of our positions, right? We're going to be aggressively moving up some stops today in a lot of positions because, we've got some pretty obvious levels of support that we can lean against now for both our bullish and some of our bearish positions. So let's do what we always do during the options jam session. What we do here is we review action amongst open positions, whether we exited them or maybe made some adjustments. We have a little bit of both this week to talk about. And then we'll review the updated stops, and then we'll talk about some new positions that we've put on. Let's get right to it. Let's get the recently closed positions. Let's just get the bad news out of the way first. This friggin' Mara, this Bitcoin miner. I'm so snake bitten in these stocks, and I said it when I put the trade on. I knew it going in that these things just have my number, but I got to keep stepping up to the plate and taking swings. Well, sure enough, we got in here about October 29th, and sure enough, that was the top of the move, or at least of that short move, and it hit our stop loss level, went straight to our stop loss level. I got stopped out, and then as soon as I got stopped out, it goes right back to where we were, right? I mean, this is classic for me. So I apologize to any of you who followed me into this trade. I mean, it's just the way it is. Risk management is number one, and we had undefined risk with the short June 15 puts in this trade. We were short the June 15 puts, and we used those proceeds to buy the 32 calls in June. We initially put that trade out for a 10-cent credit. It cost us $1.70 to get out of the whole thing. So we lost $1.60 net. Not terrible, right? Not terrible, certainly, but not the result we were looking for. I even hesitate to say this, and my screen is freezing now. So Gene, just go to my chart. My camera will come back up in a second, but I hesitate to say here that if we get some follow through to the upside on Mara and it gets back above, let's say 1950, I may get into this thing again. I know I'm a glutton for punishment. Hey, just because I do a trade doesn't mean you need to, right? But I just feel like this is one of those names that one of these days it's going to work. It has to work. I feel like it has to work. Maybe I'm on tilt. I'm probably on tilt on these things, but okay, moving on. Let's move on to the next trade. Let's talk about some good news. All right. So CCJ, this isn't necessarily good news, but we are following the plan. It's doing kind of what we thought it might do. We're long January 2026. So we've got over a year for this to play out. We bought the 80 calls and we paid $5 for them. All right. Now the plan was, you see down here at the bottom, I wanted to sell calls against this position. I want to continually sell calls against this position to lower my cost basis as much as I can. And so far, so good. We paid $5 for the January 2026 80 calls, right? On that same day, we sold the December 65 calls for $1.50 credit. Well, on the 4th, a couple days ago, the plan was that whenever the calls got below 50 cents, roughly below 50 cents, then I would roll them to the next month for additional credit. And so I did that. When the calls got below 50 cents, I rolled to January, same strike. So I'm still short at the 65 strike, which is by definition a diagonal spread, right? Because we're long the 80s, we're short the 65s. We're now short the January 65. We brought in an additional 36-cent credit. So between $1.50 there and a 36 there, we've brought in $1.86 credit netted against the $5 debit that we've spent. So right now, our total at risk in this campaign is $3.14. Not bad. I'm going to continue rolling these calls, or at least I'm going to attempt to continue rolling these calls and continue bringing in credit. I mean, in a perfect world, I'm not saying it's going to happen, but in a perfect world, we do enough credits that we are then in this trade for free. Those January 26 calls, that would be great. But stay tuned. There'll be a lot more on this trade as the weeks and months go by. All right, next up, Broadcom. Here's some good news. This was an Iron Condor trade that we got in a few weeks ago. We got in for a $2 net credit, and we got out yesterday at our profit target. We bought it back for $1. I had a resting good till cancel limit order, resting in the market to take me out of my profit target, and it got hit yesterday. So no real drama there, right? I mean, our short strikes for the 155 puts and the 205 calls, as you can see, we never really got that close to them. So we didn't take really any heat in this trade, and we got out for $1, and we made $1 profit. Sweet. All right, some more good news. Not necessarily the good news I wanted, but it's a first-class problem to have. We got out of our Zillow trade today at a profit. We had a call calendar spread on in Zillow. So we were short the November 70 calls while we were long the May 70 calls. Ideally, in a perfect world, Zillow would have traded up to, let's say, 69 and never quite got to 70. Our short November calls expire away worthless, and then the follow-through happened higher, where we had the May 70 calls with, the potential for unlimited upside. But the plan is the plan, and the plan was if and when Zillow traded to and through $70 a share, which is our strike price, if we still had the short options on, which we did, then we would cover the entire spread for whatever we can sell it for. In this case, we were able to sell it today for $7.90. So we bought it for $4.75. We sold it today for $7.90. So it's a profit. Great. A $2.15 profit. Or is that's a $3.15 profit. Great. Something notable about this trade is you'll notice we had a couple closes below our risk management level, 59 being our risk management level. Okay. Actually, we only had one close, but we were very close here on October 29th. We were trading below our risk management level intraday. We closed just barely above it, which, hey, that allowed the trade to live to fight another day. I wait for closing prices. Okay. Waiting for closing prices is not always the best move, but it's good when it's not. Or it's good when it was the best move, right? And here's a shining example. So we did not get stopped out here because we actually did close. The closing price on this day here was $59.11, just a hair above our stop loss level. Great. Stocks started moving our way. We were feeling pretty good about it. And then boom, yesterday, the stock sold off which is strange because everything else in the market was going great yesterday, right? But the stock sold off. It actually closed below our stop loss level, and that's the trigger, right? That's the trigger to close the position. Well, we still wait till the open of the next trading day. And boy, are we glad we did, right? Because we had a huge gap today. There was earnings, huge gap. Stocks up, 22% right now, even higher than where we sold it. But we actually sold our spread at a good place because as the stock gets further away from 70, in this case, higher than 70, the potential value of our calendar spread actually declines in value. So we got out at a good time. I think the stock at the time I exited was trading 70, 75, right? $70.75, I think, somewhere around there. So I'm feeling good about my exit. I wish those November calls could have expired worthless, and now we'd be riding the May calls for free. Not for free, but at a much better price. But it is what it is. I'm not going to complain about taking a profit on this trade. So we're out of Zillow. And finally, we have not exited Run. And I want to talk about this one a little bit. So we bought Sunrun back on October 31st. We bought the March 16 calls. We paid 264, and it was looking like we absolutely nailed it for 3 days. The stock did nothing but go in our favor. Well, this is one of those stocks that did not perform well coming out of the election. This is a stock with or a company with exposure to clean energy, solar, right? And it's perceived by the market that the solar industry may not do well under a Trump administration. Whether that is true remains to be seen, but the market certainly thinks so. And the stock sold off dramatically yesterday, closing below our risk management level at 13. So if I'm following the textbook here, I should have exited this trade at the open today, but I didn't. And some of you might be wondering why. Well, I have rules, and 90% of the time I follow my rules. All right. But I'm not perfect, but B, sometimes you got to know when to break the rules. And I'm breaking the rules today because Sunrun, coincidentally or not, has their earnings call this afternoon after the market closes. Now, am I optimistic that the earnings call is going to save this position? I give it less than a 50% chance that it will, but it seems worth the risk to hold out for one more day to see if the earnings call can change the perception here. We've seen it already in a lot of stocks, right? We've seen a lot of big positive reactions coming out of earnings, regardless of what the stock looked or regardless of what the chart looked like coming into earnings. And these calls right now, last I checked, I think they're trading around $1. We paid 260 for them. They're currently trading at around $1. Can't lose much more from here is the way I'm looking at it. So I'm holding on for one more day. I want to see what happens with earnings tonight. If we're still below 13 tomorrow at the open, whatever premium is left, if there's any premium, I'm sure there'll be a little bit. I will sell it and move on. But I give it less than 50% chance that the earnings will save us. But there is a chance, and it's not a crazy chance, right? It's not a long shot. It could happen. So stay tuned on Sunrun one more day. We're giving it one more day. All right. Let's talk about updated stops. Got a lot of updated stops to talk about here. I mentioned at the top of the show with the election out of the way and with volatility crashing, now we've got some clarity on a lot of charts. So in no particular order here, we're going to run through the updated stops. Let's start with Hershey. This is actually a short position that's working for us, right? In this incredible bull market, we still have short positions that are working for us. How about that? Gotta love it. We're we're long the 175 puts in February. We paid 550 for them. We got in October 28th, I believe. And so far, so good. It's moving our way. It's moving the way we want it to. We are now moving our stop down to 185. In fact, I think we're initiating a stop. I didn't have a stop when I put the trade on, but now we are initiating a stop at 185. Okay, so any closing price or above 185 will get me out of my long 175 puts in Hershey. So far, so good. Okay, U.S. Bancorp. We got into U.S. Bancorp on the 15th. This is a regional bank play. Regional banks are doing well, although not so great today, noticeably. But we are now moving our stop up to 47, which corresponds with roughly when we got into the trade. We don't want to see this level lost. If we lose 47, that tells me that the narrative in the regional banks has completely changed, or at least it's a buy the rumor, sell the news type situation, and maybe this rally here has exhausted itself. But either way, I don't care what the reason is. If it's below 47, I want out. All right, here's another short position. This one is giving us fits. Some days it looks amazing, and other days it looks terrible. Yesterday it looked terrible. We're sitting in some open profits in this trade, but not as much as we were a few days ago. But we were long the January 75 puts that we paid $2 for here back on October 18th. We are lowering our stop now down to 86.50. We don't want to see Insperity, ticker NSP, get back above 86.50, which corresponds with this sinking 50-period moving average. I don't want to see it get back above 86.50. If it does, we will close our long puts. All right. Next up, ARK, ARKK. ARK has had a tremendous reaction coming out of the election. A big part of this, certainly no doubt, has to do with the fact that it's invested in Tesla, has a meaningful position in Tesla, and Tesla has been running like crazy. So ARK, no surprise, also running. We are long a diagonal spread. We're long the March 55 calls and yes, and short the November 53 calls. So our short calls are just about at the money right now, which is notable. If we get to 54, I've got this level highlighted up here. If we get here, we are going to roll the November 53 calls. We're going to roll them up to the 54 strike, probably in December, and hopefully do that for a small credit. We're going to try to keep rolling these calls up in our direction and do it for a credit if we can. I'll keep you up to date on that in the chat room. So actually we're not, oh yeah, we did raise our stop to 46. So 46 now is the new stop in ARK. Any close below that, we want out. All right, next up, Oracle. Oracle is a position we got into somewhere around the 15th of October, mid-October. We're long the June 200 calls we paid 10.75 for. It wasn't looking good for the first few weeks, but now it's popping off like everything else. So we are raising our stop. We don't want to get below 167, which was the low on October 31st. If we break below 167, I no longer am interested in Oracle, and I will close this trade. All right, next up, Samsara. I keep wanting to call it IOTA, but Samsara, ticker IOT. We're long January 60 calls. This thing's been mucking around for us, kind of, yeah, equally frustrating bulls and bears alike. But today, it's not holding at the moment, but it was trading at new all-time highs, or at least new all-time highs for us. So that's a bullish development. I'd love to see this follow through today. But we're going to raise our stop up to 46, which corresponds with the low of this region here. We don't want to see IOT get back below 86. Next up, Toast. Toast is having a nice breakout here. It's been a good 2 or 3 days here. We're long a bull call spread. The March 30 calls were long, and we're short the 40 calls. We're raising our stop now to 28, which roughly corresponds with the price level of the stock when we got in. And it also corresponds with that rising 50-period moving average. So 28 is my new stop loss level in Toast. Let's hope that follow through, or that breakout follows through. And lastly, again, there's no particular order here, but here's Grab. Grab is working out for us great. We're long January 2026. We have more than a year left till expiration. We bought the 5 strike calls. We paid 40 cents for them. Well, Grab is breaking out for us. It's a new high for us, new high for our position. I'd like to see this hold on to these gains. But for now, we're going to raise our stop up to 380. You can see it right here. 380 roughly corresponds with where we got into this trade. And this 50-period moving average should meet that 380 level pretty soon. So that's our updated stop. Any close below 380, trade's dead to me. All right. Okay. That's all the updated stops. We've had a few weeks in a row where we didn't have a whole lot of updated stops to talk about, but this week we had, what was that, 8? So a lot of action going on. Lastly, let's talk about some new positions we've put on since we last spoke last week. We just had a couple because we didn't want to be too active coming into earnings. We made our bed. We wanted to lie in it. And we have mixed results so far in the new trades, which, by the way, all the trade details for these trades, if you're new here, if you're watching the All-Star Options Jam session for the first time, all the details for these trades are on the blog at allstarcharts.com. Head to the members section, head to the options section. You will find detailed pieces about every trade that we've put on, why we like the setup, what option strategy we're using, how much risk we're taking, where we're setting our stops, where we may or may not take profits or make adjustments. All of those details are laid out in every blog post. You can find it at allstarcharts.com. That said, These are the two new positions we've put on in the last week. Eric being one of them. We put a bullish position on an Eric. So far, it's not working out, but it's got time. It's got time. And next up, FXI. This one has worked out great for us so far. We got into this one yesterday. Again, all the details about this trade. This trade is a little bit nuanced. I mean, there's a couple different ways you could I laid out for you to trade this or to participate in the move that we see coming in FXI. Again, all the details at allstarcharts.com. But needless to say, we are bullish on FXI. And hey, good start. We got in yesterday, and FXI, the index is up pretty nicely today. So up 5% for us. One for the good guys. All right, everybody, let me bring this slide back up for you. This is all of the updated stops. I know some of you like to take screenshots of this and act accordingly. So there you go. You'll notice that the HSY at 185, that's just a reminder to me that that's a new stop. We're initiating a stop on that short position. We didn't have one before. We were willing to risk it all as a portfolio hedge. But now that it's going our way, we want to see if we can try to lock in some profits here, or at least minimize any potential losses. So we're initiating that stop at 185. All right, everybody. If you have any questions about anything we've discussed here, please shoot me an email at info@allstarcharts.com. If you don't have access to the detailed trade plans on our blog, head to this link here, stockmarkettv.com, get all-star options, and we'll hook you up. And finally, if you like the charts that I share, go to trendspider.com and check them out and use promo code Sean50, and they will give you 50% off a subscription plan at TrendSpider. How about that? Pretty sweet. All right, everybody, that's all I got for you. Have a great rest of your week. We'll be back next week doing it again. Take care, everybody.